are the tidbits for today. ETF percentage of the stock market on 6/9 of 2023 said exchange traded funds share of the stock market trading volume grew over the past year as traders used them in strategies to reduce volatility, sparked by rising interest rates, inflation, and turmoil in regional banks. ETFs make up about 32 to 33% of total stock market trading, according to Shelley Antashevich, Senior Director of Industry and Financial Analysis of the Washington, D.C.-based investment company Institute, an asset manager industry trade group. That's a boost from 21% in 2022 and a leap from 26% that was going back to 2013. So ETF trading jumped last year as the stock market had their worst year since 2008's Great Recession, with the Spider S&P ETF SPY falling 20%, but that was less than most mutual funds came down, especially those that were in technology. The VIX measure of volatility surged 30% as Russia invasion of Ukraine pushed commodity prices higher, and the Federal Reserve began raising interest rates for the first time in 2 years in an effort to tame spiking inflation. In volatile periods, we tend to see more trading in ETFs. They are diversified, trade at tight bid-ask spreads, and they can be sold short. They will often be used as a hedge to gain short-term or shed short-term asset exposure. And the rise in ETF trading is also due to the growing popularity among investors interested in investing the indexes rather than individual stocks. The industry has grown to include $7.11 trillion in assets since the first ETF was launched 30 years ago. That is a long, long time. So who are the big Tesla owners? Elon Musk is still the Tesla stock king. Musk, the techno king of Tesla, has a downright regal influence in terms of Tesla stock ownership. Unlike many other founders who have largely lightened up on their ownership stakes, Musk still holds more Tesla stocks than any other investor. He owns 411 million shares, or nearly 13% of the shares outstanding. And again, that's been a smart move this year. The value of Musk's position in Tesla this year alone is up $55.7 billion, taking his total stake in the company to $106.3 billion. Why would you ever want to sell that? The top owners of Tesla stock in the S&P 500 and ARK isn't even in the top 10. We have Elon Musk with 12.9%, the Vanguard Group with 6.9%, BlackRock with 5.6%, State Street Global Advisors at 3.1%, Capital Research and Management 1.6%, Geode Capital Management 1.5%, Larry Ellison 1.4%. So we have 13, 7, that's 20, we have 29, we have 30, 32, 33.4% or more of Tesla is owned by just these 7 people or 7 companies. Very interesting. Oil is now being priced in dollars in some countries. Pakistan is now paying for Russian crude oil in the Chinese yuan. It is beginning to make the currency and security world take notice, with more of the Middle East joining the Chinese push away from the dollar. This would be very, very bad. Oil is priced in dollars, and the more people that don't pay for oil in dollars is going to cause our country to have to put up more bonds to raise money, because we get so much money back from people using our currency and buying our bonds because they're paying for oil in dollars. Keep that in mind because more and more countries are doing this. It would be devastating for the US dollar. Moving on. We just talked about that. So we'll look at another slide. And we could look at AI.
Is this okay, Cookie, or you want to change it?
Unmute it again. Okay. The relationship between stocks and volatility. If you go to stock charts at the end of the day, they usually have a podcast on there which talks about what happened for the day. And in addition to David Keller being the person who controls this, they usually have a guest of some renown that is on there. So this is just telling you a little bit about what was on that particular day. But very, very worthwhile information. And they're not that long in terms of time. So another thing about ETFs, remember to pay close attention to the fund's expense ratio. The Global X Lithium and Battery Tech ETF, LIT, for example, has an expense ratio of 0.75%, which means that for every $1,000 you invest in this, you would pay $75 a year in expenses. Typically, a range of 0.5 to 0.75 is considered fair. A ratio above 1.5 is considered high. So something to keep in mind. But there are fees that you pay for mutual funds as well. So after AI, what could be the next big thing in tech? Well, the next big thing is quantum computing. Possibly the next big thing in tech after artificial intelligence is coming into its own. While the potential rewards are huge, the threats to cybersecurity are as well. The New America column profiles Shopify. The e-commerce software giant is seeing its stock and earnings estimates soar after selling its logistics unit, letting it slash costs in a corporate spaceship. Check out my weekend stock market today column, analyzing the recent market action, highlighting futures and noble stocks to watch. The latest column discusses the market rally continuing to strengthen, but has grown increasingly extended, especially the NASDAQ. The column looks at 10 stocks to watch, including 3 tech leaders start to pull back. Join the IBD experts before the open and the first hour of trading as they analyze actionable stocks and the market trend on IBD Live. So quantum computing is the next biggest thing. I mean, they can look at various things that are being done and they could do it faster and get into things quicker than we can. So this is looking at some of the energy stocks and what happened with those year to date. And energy has been pulling back. And you can see that there was a one-day change here in one of them that was up 8.15%. And there was another one that was up 3.29%. And for some reason, we can't see the columns before that because when I set this up, I should have just put some blank spaces in there, which here we go. We can now see what those were. The one that went up was SCO, the ProShares crude oil. That was up 8.15% for a one-day change. And the other one that was up was OILD, which was oil and gas exploration, and the oil and gas exploration tends to go up before some of the others do. That was up 3.2%. And then this one, a WTO, was up 3.41%. So three of the 9 or 10 of that we had here were up. And as I said at last month's meeting, we should see an increased trend in that because more people are driving, going on vacation, going up north to their cottages, running their air conditioners. So natural gas is going to be a play in that. And certainly we've seen that in terms of what happened with Boyle in the last week. Boyle had a very nice move upward, and it was just a penny shy of what its previous high was a month or so ago. So that's all I'm going to say about this particular slide. Moving on. Okay, so this next slide, it tells you what stocks to buy, and watch in the stock market rally of 615. And the stocks that they have listed here are ASML, which is in a cup with a handle, Salesforce, CRM, which is in consolidation, Cloudflare, NET, which is in a double bottom, Fortinet, FTNT, which is in a flat base. And then they say that the S&P 500 tech and communication leftovers are all down this year, but analysts say they are not out. So we talked about the communication sector when Keith showed the RRG graph. So in that grouping, we have Dish Network, and the upside target for analysts is 186.1%. We also have Charter Communications, and that upside is 38.1%, symbol CHTR. We have T-Mobile, TMUS, also in communications, 37.4%. And then we have Verizon, VZ, 23.6%. In the information, and we also have AT&T in that same grouping at 33.9%. Then information in technology, we had Enphase, ENPH, expected upside 41.7%. We have Solar Edge Technologies, SEDG, 36.7%. We have Teledyne, TDY, and that's 24.5%. So that's a list of some of the things you might want to look at because IBD came up with these last week and said that those were the things that had the best promise at this point in time. Moving on to the next slide. Okay. These are all stocks that we might consider looking at as well. And where I got these from was market charts. And I took the best performing stocks in that group for the day. And so for the 1st of June, AEHR Test Systems had a change of 12.45%. And I showed some of these to you last month because they said what you need to do is you need to go back and look at the graph of those and find out when they started to make their move upward. The move upward actually started before this 12.45% move. And you would want to have been in there so that you could have profited from that move. So for your homework, this is something that you could look at. On 6/2, we had 2 stocks that made that list. We had IoT, which is Samsara, and it was up 29.31% for the day. And we had DGLY Digital Ally up 33.92%. We then had on 6/5 three stocks that made that list, and they were Unity Software, symbol U, up 17.20%, CXA Application, Class A, up 15.28%, AMED Amadeus, up for 15.33%. On 6/6, we had three that made the list, HOTH, Hoff Therapeutics, which was up 85.37%, the big mover in this list for a while. We had GIII, G3 Apparel Group, up 21.29%. We had AMTX, Amatis, up 12.33%. Then on 6/7, we had three, YEXT, which is the symbol and the same name of the stock, up 36.67%. We had Roku, the symbol and the same name of the stock, up 13.67%. We had Play, David & Buster Entertainment, up 18.97%. On 6/8, we had three stocks that made the list. We had Affirm, AFRM, for Affirm Holdings, up 16.44%. The best of the group was BAOS Shang Media Group Holdings, up 133.05% in one day.
Whoa.
Okay, we have Upstart, UPST, up 14.79%. And if we go down the slide, there should be several more that are on there because we would have had last week's as well. Or maybe not. So my thought was I was going to keep these for, a whole month, go back and see how many days before then I would have gotten into these. And on 6/8, there was another stock that made the list, IGT, International Game Technology, up 14.25%. On 6/9, we had two stocks, ACHR, Archer Aviation, up 11.39. We had BRZE, Braze Incorporated, which was up 21.47. It also made the stocks on the move list for the day for the IBD group. We have on 6/12 four stocks that made that group. We have KDNY, Chinook Therapeutics, up 56.27% in one day. We have MRSN, Marsana Therapeutics, up 10.53%. We have RONI, RONI, Rice Acquisitions Corporation, Class A, up 10.59. On 6/13, we have IPX, Hyperion X Limited, up 118.84% in one day. We have Play again, Dave & Buster, who was up there the previous week. It was up 16.48%. On the 14th, we had three stocks that made the list. We had Next Decade Corporation, up 43.37% in one day. COHR, Coherent Corporation, up 15.09. We have Vera Therapeutics, up 24.53. We have AI, which is 3CAI Incorporated, Class A, up 10.05. We have LEJU, Leju Holdings Limited, up 23.85. We have Virgin Galactica, SPCE, up 20.45%. We have MBOT, Microbot Medical, up 18.20. We have Applied Optoelectronics, AAOI, up 14.9%. 18.32%. We have IRBTI Robot up 19.49%. Those are one-day moves. One-day moves. So you're going to have this list. You can do your homework. You can take every single one of those and find out when you should have moved into those. So moving on, we have the growth of foreign debt. And you can see that between 2002 and 2013, the Treasury holdings jumped from 100 billion to a record $1.3 trillion of debt. China was the biggest holder of our foreign debt during that period of time. That is huge. We are beholden to China because of all the debt that they hold. If they ever ask for it back in one day, we are SOL. They will own every big corporation in this country. We don't have enough gold to pay them back, and we certainly don't have the money to pay them back in one fell swoop either. Moving on to the next slide. Okay, what we have here are ETF newsletters, and we were looking to see if there were any ETF newsletters that did a real good job on ETFs and specifically on the leverage ETFs. And the two that are the very best at this point in time are the All-Star Funds. They have a free site, and they also have one that costs $14 a month. And you can go to contact. That's the email address for it, content@magnifycommunities.com. This is a phone number that you could use to call them if you wanted to sign up for the $14 a month one. But you can go to this address, All-Star Funds, and you can sign up for free. The next one is the VETI FI/ETF Trends. That is the best of the best. And you can get all kinds of information there. And what happened here was there were several different ETF newsletters that merged together into this one thing called VETI FI ETF Trends. You can go to that site and you can pick out any type of ETF you wanted, whether it's one that is leveraged, non-leveraged, if you want some that are just in commodities or whatever, you can pick and choose what category you want. It is wonderful. Some other people were into ETF Replay before, and while it is still good, and it does charge, there are some free areas, but the paid one is $29.99 a month or $199 a year. It allows for back testing. The people that were using it felt that there were other things that were better than that at this point in time. And if we move on down the list here, I got a sample from ETF Maximizer, and you can go to that particular site and you will get a sample as well. These numbers here represent the number of hits and people that go to these particular sites. And you can see that the MarketWatch ETF Trader is one that is very, very good, and that was for the free site. Morningstar charges $199. That's the second most hits that they get. And I found that the cheat sheet was really of no use, and neither was successful investing. The ETF.com is very good because it gives you new filings. So it tells you what new ETFs are coming out, when they're coming out, who is the company that's putting them out, what the symbol is going to be, etc. Very, very good site to go through. And then when I went to ETF Digest and Dave's Daily, it locked up my computer, so I ain't going back there again, okay? I felt that the ETF Expert and the Money in Markets were of no use. ETF Channel had a sample. You can see that the number of people that go to that site are not nearly as high as the other sites that I mentioned to you. So I would stick with the MarketWatch ETF Trader, the ETF.com for new filings, the ETF Maximizer and ETF Channel that both gave you samples. And certainly the one that was up at the top that I gave you first, which was the VettaFi/ETF Trends and the All-Star Funds. Free sites for both of those. Excellent, excellent. If you're into ETFs, you want to go to these newsletters, you want to sign up for them. So, you know, I'm getting more stuff than I have enough time to look at on a daily basis because I signed up for all of this crap. And I'm getting out of them one by one, but certainly I'm getting a lot of information, which I hope to continue to share with you at these meetings. And I hope that if you're into ETFs, that you will look at some of these because you will get a lot of great information that will be helpful to you. Moving on to whatever else I have there, and I'm sure there's something else there. I'm never at a loss for information to share, just enough time to share it with you. Okay. And basically, this is talking about some of the ETFs that have been having a lot of activity recently, like SOXL, SCO, EVAB, TFCI, USD. And this, you can actually see the chart by going to this particular site, ETF Channel, and you will be able to actually see the chart of that particular ETF. And it'll show you what the change was for the day. So you can see that the QQQ this day was up 5.99%. You can see that VEA was up 0.21%. So the winner for the day was QQQ, but right behind that was IVV up 3.91%, the SPY up 3.88%, the VOO up 3.55%. And so those are all areas to look at. And certainly retail, which was showing the percentage of stocks that were being shorted, and that was a very large percentage. Home builders also showed a fair number of shorts, as did regional banks, oil and gas exploration, and biotechs. And you can get a list there of all the shorted ETFs, and you can get all the ETFs that are ranked, and you can see that, you know, the ones that are ranked here are not necessarily the ones that have the best return year to date. Certainly the ETFs that are listed in IBD, as I mentioned before, I take the top 6 in terms of year-to-date return. They have to be over 70 for relative strength. And the ones that do the best are the leverage funds. And unfortunately, when they show you the ones that are the best performing, they don't include the leverage funds. But you do get them on the daily ETF list if you download that. Okay, moving on to the next slide, if there is another one. We already talked about that one. Okay, this is showing that what percentage of the countries hold the most US debt. And currently, Japan holds more than China does. China was the big one. They are not buying as much. Japan still is. So Japan holds 1,076 billion percent is 14.70 of all of the countries that hold our debt. China is number 2 with 867 billion, United Kingdom with 655, owning 8.90, Belgium is 354 billion, 4.80, Luxembourg 3.29 billion, 4.50, Cayman Islands, I thought that was interesting, 2.84 billion, 3.90, even though we say, you know, you're not supposed to put money there because you're shielding it away from the IRS. I tried to open an account while I was there. Switzerland, 2.70 billion, 3.70%. Ireland, 3.55 billion, 3.50%. Taiwan, 226 billion, 3.10%. Remember, we would be upholding and we would be trying to protect Taiwan if China decided that they were going to invade. And at the bottom of the 10 top, we have India at 2.24 billion, 3.10. I mean, if you add these all up together, that is a very large amount of debt, a very large amount of debt. I mean, dollar-wise, unbelievable, unbelievable. We are beholden to a lot of people. Next slide, 62%. Okay, I think we can probably see something else a little further over. Oh, these were adds and deletes to the IBD 50, etc. And those showed up last Monday. So if you download anything from IBD, you would have gotten this in the Monday download. And the stocks that were added to the IBD 50 were Allegro, ALGM, Monolithic Power, MPWR, On Holdings, ONON, my pick from last month, Shoals Technology, SHLS, United Airlines, UAL. The ones that were taken off the list, if we can just move the slide up a little bit, were, okay, what was I talking about? Oh, the ones that were removed were, no, we have to go up a little bit higher. Removed from the list was AAON, Churchill Downs, CHDN, JFrog, FROG, LI Auto, symbol LI, and Progeny, PGNY. There were no adds to the sector list, but the one that was removed from the sector leaders was LNTH. Added to the Big Cap 20 was Dynatrace, DT, Palantir, PLTR, and Zscaler, ZS. Removed from the Big Cap 20 were Broadcom, Avago, AVGO, Synopsys, SNPS, Trade Desk, TTD. Added to the IPO leaders list was Sun Country Airlines, SNCY. And there were none that were removed. Added to the spotlight list were Elf Beauty, ELF, Fortinet, FTNT, Palo Alto Networks, PANW, Pulte Group, PHM, Technoglass, GGLS. And removed from the stock spotlight was DigitalOcean Holdings, DOCN, First Citizens Bank Shares, FCNCA, Front Door Incorporated, FTDR, Stabanto Groups, STBN, and Taylor Morrison Homes, TMHC. So if you go on Monday and look at those, you will see what got added or deleted, and you want to look at the ones that were in the added column because those are the ones that have the best possibility of moving up. Next slide. And I hope we're almost done. I'm getting tired of talking. I mean, you're going to get tired of listening to me. Okay, this is basically showing something that I showed at last month's meeting. And what I did is I took my newspapers out from my garage and I went back and took on a weekly basis what the top 10 stocks in the NASDAQ were and what their percentage was of the NASDAQ. So you can see that going back to 2020, we had 41.8%. We made a high of 43.1%, went back down, made another high of 44.3% at a time that the market was in correction. Now, one of the things that happened was sometimes the ones that aren't as big have a percentage increase that goes up a little bit, and that's what makes a difference there. But, you know, you can look at this at another time, but let's just look at what's going on now. We started the year in correction, and we were at 39.2% of the top 10 stocks in the NASDAQ composite. We then went into uptrend at 41%. The following week, 41.9%. 127, we were 43.6%. We pulled back, made a low of 42.8% 2 weeks in a row. And remember I said that when you usually make the same number 2 weeks in a row, it's anchoring and you usually have a change in direction, which we did, and then we started to go up. And then we made a high of 46.3 at a time that the market was in correction on 317. We went down on 421, we were at 45.5. And we then moved up. We went to 46.6, 47.1, 47.6, 48.1, 49.4, 49.4, 51.1 on 6.9, and last Friday we were at 49.5. Now the 51.1 is the highest it has been for any of these time frames. We have never been that high before. 48% was the high that we made before, and that was 325 of last year. So you would expect that there's going to be a pullback, and the pullback happened more in the top 4 stocks than happened in some of the others. Not a real big move, maybe you know, it went down by 0.2% or something like that, but it did go down. So you will have this slide and you can look at it. You can update it if you want yourself just by taking those top 10 stocks, adding the number together, and that tells you what the total percentage is if you take the percentage of the top 10 stocks. So all I'm going to say about that. So this pullback is not unexpected, but I don't think it will last for a very long time. There may be only one more slide. Hopefully.
I think we are done.
Is that it?
Yeah.
Wonderful.
Yeah, great information. Thank you so much.
All righty. Thank you for
Okay.
doing what you did.
Yeah, thanks.
Okay. Remember, if you want me to resend you that thing from Ira, I can do that as soon as I log out here.
Yes.
But I did send you Tanner, so and I just